Hello and welcome back to the channel, where we break down the most intriguing market movements. Today, we're diving deep into a fascinating microcap that's popped up on our hard-to-borrow screener, LHSW International Group Limited, trading under the ticker LHSW. We'll unpack why the stock is drawing attention from the short squeeze community and what its unique setup means. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo/info card. Let's start with the basics of LHSW. LHSW International Group Limited operates in the technology and software infrastructure sector in China. They specialize in machine vision products and solutions, including industrial machine vision products, artificial intelligence applications like face recognition and AI behavior analysis, and intelligent current products. It's a small player with a market cap of just $7.04 million. This microcap status is often a key ingredient in stocks that exhibit high volatility. What is cost to borrow and why it matters? Before we get into LHSW specifically, let's quickly explain what hard to borrow means. When you want to short sell a stock, you need to borrow shares from someone else. The cost to borrow, or CTB, is an annualized fee you pay for borrowing those shares. Think of it like interest on a loan. When a stock is hard to borrow, it means there's a limited supply of shares available, and demand from short sellers is high. This drives the CTB fee through the roof, sometimes well over 100% per year. A super high CTB tells us that it's expensive to hold a short position, and it can be a precursor to a short squeeze. Why the stock is hard to borrow right now. Show CTB chart for LHSW. Now let's look at LHSW. This stock appeared on our screener for a very compelling reason. Its annualized cost to borrow fee is an astronomical 645.5%. That means short sellers are paying over 6 times the value of the shares just to hold their short positions for a year. Not only is the fee incredibly high, but we've also seen the CTB momentum decrease by 45 percentage points over the last 5 trading days, suggesting some existing shorts might be closing positions or new shorts are less eager at these rates. Crucially, there are only 2,000 shares currently available to borrow against an estimated float of 1.0 million shares. This extremely tight supply, coupled with such a high borrowing fee, is precisely what makes LHSW a standout hard-to-borrow candidate right now. Our internal composite squeeze score for LHSW currently sits at 48.5 out of 100, which indicates a moderate but notable setup. Squeeze mechanics explained. So, what does this all mean for a potential short squeeze? A short squeeze happens when the price of a stock begins to rise, putting pressure on short sellers. With such a high cost to borrow for LHSW, and only 2,000 shares available, any upward price movement can become amplified. Short sellers who borrowed shares at a low price start facing mounting losses, compounded by the 645.5% borrowing fee. To limit their losses, or simply to avoid paying exorbitant fees, they might be forced to cover their positions, which means buying back the shares they initially sold short. This rush to buy creates a surge in demand, pushing the stock price even higher, trapping more short sellers, and creating a cascading effect, a short squeeze. However, it's crucial to remember that a high cost to borrow doesn't guarantee a squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. Dilution risk check. Show screener results, no dilution. A critical check for any squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, which increases the total share count and can offset or negate any potential squeeze by adding supply to the market. For LHSW, we've found no recent diluted SEC filings such as -1s, -3s, or 424Bs in the last 90 days. This is a positive sign, as it means the existing flow isn't currently under threat of being expanded by the company itself, which preserves the tight supply conditions we see. Recent reverse split watch. Highlight reverse split date and ratio. Now let's talk about something very recent for LHSW, a reverse stock split. LHSW executed a 1-for-16 reverse stock split just 25 days ago, on June 22, 2026. A reverse split reduces the number of outstanding shares and proportionately increases the share price, but it doesn't change your total investment value. For example, if you have 160 shares at $1, after a 1-for-16 split, you'd have 10 shares at $16. Reverse splits effectively reduce the float, making the remaining shares potentially even harder to borrow. Historically, many microcap stocks tend to see new volatility or even a price pop within about a month after a reverse split, as the market re-evaluates the new price point and reduced share count. While this is a pattern observed in some microcaps, it is absolutely not a guarantee for LHSW or any stock. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Share price chart for LHSW. Looking at recent price action for LHSW, it's actually been moving downward. Today, the stock is down 3.40%. Over the last 5 days, it's down 10.28%, and over the last 30 days, it's seen a 21.18% decline. This downward trend could be attracting more short interest, or it could simply reflect broader market sentiment for this stock. Volume is also a key factor. Today's volume for LHSW was only 66,736 shares, which is significantly lower than its 30-day average volume of 4,108,628 shares. This extremely low relative volume Xerox average means that despite the high CTB, there hasn't been significant trading activity recently. For squeeze to ignite, we typically want to see an increase in volume as buyers step in, putting pressure on shorts. Keep an eye on the borrowable share count, the CTB rate, and any sudden increases in volume that could signal a shift in momentum for LHSW. So, LHSW International Group, LHSW, presents a compelling hard-to-borrow case with its staggering 645.5% CTB, extremely limited borrowable shares, and a recent reverse split that compressed its float. However, its recent price and volume action suggest it hasn't caught the attention of buyers yet, and as always, high CTB doesn't guarantee anything. This stock is definitely one to keep on your watch list if you're interested in potential short squeeze setups. If you found this deep dive helpful, please hit that like button, subscribe for more unique market insights, and let us know in the comments what stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next video.